Hello, everybody. Today is NIPA's event. Today is Monday, August 14th, 2023. Welcome to NIPA's Banking on Cannabis, the Golden Opportunity Beckons. We are presenting monthly events out of NIPA that blend educational experience with networking in the financial services industry. We're a community of senior executives and innovators in payments, fintech, and banking. I'm Ron Mazurski. I'm the founder and a board member of NIPA and a partner in Pagility Advisors. Today, we're going to start off with three different things. First, training in cannabis banking. We're then going to have an expert panel on cannabis banking, giving you the various perspectives of it, and you'll hear more about that panel in a minute. And we'll then have a networking session where you can meet the panelists and other attendees at this session at the tail end of the event. Just a couple of administrative items for you to take into account before we move forward. Please type any questions you have in the chat feature on the bottom of your screen. I think you'll have chat. When you click on that, a little box or window will open up. Type your question in there and send it off. One of us will be picking up those questions, and it'll be used for Q&A at the end. Please turn off your video if you don't mind during the session, and also please mute your telephone if it's not muted already. This will enable us to have sort of a focus on just the speakers. And for those of you that want to just see the speakers and not all the other names and boxes, etc., click on View in the upper right-hand corner of your screen, and you can choose speaker only, and then you'll hear and see just the speaker at the time. Now, let me introduce you to Michael Flores. Michael is our moderator for the session, part of the NIPA event team. Please, Michael, take it away. Looking forward to hearing the event.
Thank you, Ron. I appreciate it. And thank you all for attending. This is a great turnout. And we look forward to a very informative initial 30-minute session with Dena Somers, followed by our panel with Danielle, our banker, with Neil, our attorney, and Kirill, who's an executive with a CRB company. To start off, Dena, well, initially, I am CEO of Bretton Woods Inc., an advisor and research firm, as well as an advisor to Infused Banking and education outlet for cannabis. Dena is a founder of FinReg Partners and instructor with Infused Banking. She's an attorney and consultant in the banking and financial services area. She assists banking services companies in designing and developing integrated enterprise-wide compliance and risk management programs. And I think seeing a lot of the folks who are attending here, compliance is going to be of great interest. Today, she'll speak on the opportunities, challenges, and preparedness for those that are considering getting into cannabis banking, or those who are in it right now, but may not understand the full ramifications of the business that they're in. I'll then introduce in more detail our panelists at the end of this. So Dena, if you would please take over.
Thank you, Michael. And I really appreciate the opportunity to join this event that's hosted by NIPA and the panel of experts that NIPA has garnered for this event. So as Michael indicated, I'm going to focus on three topic areas: opportunity, challenges, and bank preparedness. So for opportunity, every year analysts predict the cannabis industry's worth, and every year that number exceeds expectations. Back in 2019, Wall Street's top cannabis analysts predicted the industry would be at 80 billion by 2030, and here we are, 2023, about 60 billion. We'll qualify that by saying that about half of that is the legal cannabis industry, and that's going to segue into some of our discussion on challenges today. But by all accounts, the industry is expected now to reach about 100 billion by 2030. So the question for financial institutions or from financial institutions is, what the impact of the industry is, specifically on financial in the financial services sector, and for depository financial institutions, specifically banking. And so I would like to look at California as a case study in the impact of legalization in the banking sector. So California, as you know, is the largest sub-economy in the world. Only 4 national economies have GDPs greater than California. There was a study that was published in 2021 that I'm going to cite some of their findings from, because I think this really highlights the tremendous growth opportunity and the lucrative opportunities for financial institutions in the industry. So what this study found, well, one of the main points of the study was to explore the impact of legalization of the cannabis industry on the California banking sector. And what they found, I'm going to highlight just some of the findings. And if you are interested in reading the study, it's On the Money, 2021, as I said, as the year was published, On the Money, Characterizing Banking and Lending in the California Cannabis Industry. Cannabis is the state's highest value crop and generates more revenue today than the top 2 legal crops, being dairy and almonds. Specifically, they said, again, looking at the banking sector, so just some background, medical cannabis was legalized in California in 1996, recreational in 2016. After the passage of Prop 64 in California, and I'm going to read some of the statistical findings, total financial assets summed across all banks and credit unions headquartered in a county. And so the study was performed based on counties where there was legalization. Of those financial institutions, what they found were total financial assets are 741 million higher for counties with legal cultivation. And again, this was in 2021. An additional manufacturing license in a county is associated with an increase of more than 63 million in total bank assets, again, in a county. An additional retail license is associated with an increase of more than 42 million. So what they found in the aggregate were that banks in counties where legalization had occurred, tremendous growth in financial growth in assets, specifically deposits, from pre-legalization versus post-legalization. So the primary components of assets, as I said, were deposits, and that begs the question to me: are financial institutions missing this golden opportunity, especially in the current climate of rising rate environment? So and we're still again with opportunity, we're still in nascent stages. If you do a quick Google search and you look and you see the FinCEN statistics, they're a bit skewed. So FinCEN produces a report annually, usually comes out around Q3 or late summer. I have to get the name of it. Marijuana Banking Update. The last update that they published was Q3 2022. And they reported 784 financial institutions providing financial services for the cannabis industry. That is, not entirely accurate in terms of banks that are publicly participate in banking cannabis is closer to about 250. The reason being for that difference is the FinCEN numbers are based purely on SAR filings, your suspicious activity report filings. And there are a number of banks that inadvertently engage in cannabis banking and file SARs. And so that number is a bit exaggerated in terms of the real, competitiveness in the environment. Nonetheless, with that still less than 10% of all banks banking cannabis, this is still the early stages, arguably still the nascent stages. So there's tremendous opportunity for financial institutions to still enter into the space. Talking about the challenges, most of these are obvious, but I want to touch on a few points related to them. The reason for the limited involvement, number one, primarily fear of enforcement action. The unregulated cannabis banking market is thriving, especially in jurisdictions like New York, California. So banks are trepidatious to enter into the space, enter into the space, not just for an enforcement action, but in terms of understanding the requirements and the legal and regulatory compliance requirements that are imposed on banks. So fear of enforcement, BSA enforcement, and some, I'd say, lack of understanding and knowledge of the compliance requirements. And that I'm going to segue into technology in just a second, because many of the banks that I've talked to very early on wanting to enter the space, their knowledge of cannabis banking was, I would say, limited to understanding the 2014 FinCEN guidance, which is the only guidance that's available to financial institutions wanting to bank cannabis businesses, and the Cole memo. But we are so far past, that being the education hurdle for banks when they enter into the space. And that touches on my second point, and that is the regulatory quagmire that financial institutions face. So you have state laws that vary by state, some also local ordinances that vary, that are also evolving. I know our panel discussion is going to talk somewhat about some of the state laws that impact regulatory compliance for banks entering into the space. And then at the federal level, everyone knows cannabis is still a Schedule I controlled substance under the CSA, the Controlled Substance Act. And so banks just trying to maintain compliance with your standard everyday BSA compliance requirements, it's very challenging. So to enter a space that is new and novel for the institution, new and novel, and it's also a territory of unknown challenges beyond those that you can typically read about when you do your initial research. And that's one of the reasons why it's so extremely important and vital for financial institutions to share their collective experience in forums such as this one, so that you can learn from past lessons of other banks, the few banks that are banking in the industry. Because we don't have, banks don't have lessons learned that are widely publicized, that regulators typically publish their enforcement actions. There's only a handful related to cannabis banking, but only one, the light thing in the tunnel, there's only one that I'm aware of, and it was against a credit union, not for banking cannabis, but for having failures in their BSA program. So having a strong BSA program to start before entering into this emerging market is critical. So that speaks to the second challenge, and that's understanding the regulatory requirements. But before moving on, I also want to mention, understanding the industry. That's also a challenge. If you're not familiar with Delta 8 or Delta 10, there's some legal questions there's some questions about the legality of Delta 8 and Delta 10. Those are cannabinoids that can be produced naturally. They could also be produced synthetically. Most would agree if it's produced naturally from the hemp plant, it is legal. However, it's more commonly synthetically produced through a process called isomerization. A number of products have hit the market. Some states have explicitly prohibited products from Delta 8 or Delta 10. Other states it's still unregulated. So I bring this to your attention to really highlight the ever-changing and complex regulatory environment in which this space operates. And so understanding the regulations, fear of enforcement, and the third one being the cost of maintaining a program to meet the regulatory expectations in this industry. To understand your compliance requirements, you most certainly need experts and very skilled, not so much experienced personnel, that those are few and far between, but it's absolutely critical to have staff resources with knowledge and expertise in this industry. And just to give you an example, and this sort of speaks to the criticality of communicating with banks that are engaged in this industry. I attended a conference last year, and the banker that was speaking told a story. She did it very comically. She was fantastic. This is her story, so I'm not taking credit for it, but she referred to one of her in-store visits for the dispensary. This was a retailer that was a customer of the bank. And during one of their on-site visits, as part of their ongoing monitoring, she noticed a nugget of cannabis on the table. Upon further inquiry, long story short, the dispensary referred to those as floor nuggies. What are floor nuggies? Oh, customers, that want to purchase products, sometimes if you spill on the floor, and we collect them in the box. Ultimately, she learns that the dispensary, that the owner's son takes the box of the floor nuggies and quote unquote returns them to the state regulator. Needless to say that that customer is no longer a customer of that bank. But sharing these stories really helps your bank staff and personnel understand the risk and how to identify red flags. So, the fear of the unknown, but combined with that is the cost, and the cost of having the right resources in your BSA department, in your, maybe you have a CRB, your cannabis related business banking program, but having staff with sufficient knowledge and expertise to build this program for your bank to maintain compliance. So those were the three, from what I found, the three biggest challenges and the reason that limits involvement from financial institutions in the cannabis banking industry. That said, kind of segueing into, banks are doing this, and how are banks successfully doing this? And this kind of segues into our preparedness and how banks can or should prepare for banking cannabis. Everything starts, just like all other products or new products within the bank, with a risk assessment. The program for banking cannabis is not remarkable. So if you look at any bank's policies and procedures, they're not magical. There's nothing, too unique about them. The critical component of your CRB program is really in your day-to-day procedures and how your bank is actually monitoring. How are you onboarding your customers and performing due diligence? Before we get to that, though, again, understanding your risks. So performing the risk assessment, just like everything else the bank does before undertaking new products or riskier, higher risk, I'll say, customer segments, is performing a risk assessment. That assessment, we're all familiar with, reputational risk, compliance risk, operational risk, but some of the factors I would highlight that are often or sometimes overlooked, number one being strategic risk. And that is your financial institution considering or undertaking other initiatives that may strap resources or resources, time, and effort because your CRB program is going to take considerable resources and time to build. Again, your policies and procedures aren't magical. Those can be done, literally, you can produce those in a day. But it's more about building out your program to make sure that you're compliant. So compliance risk, reputation risk, strategic risk, liquidity risk. So banking CRBs can bring in significant deposits, not generally overnight. Most banks are going to, pilot a CRB program with 1 or 2 CRB customers. But once you've established a sizable program of customers, of banking these customers, they're going to bring in a lot of course, non-interest income, but as part of your risk assessment, you need to determine upfront any potential risk that significant deposits would have on your loan to deposit ratio. The same, by the same token, if you exit very quickly or plan to exit the cannabis industry, you would need to decide what the exodus of deposits does on your LTD ratio as well, and also your funding strategies. Regulatory health, I think that is, fundamental and standard. You should have ideally a rating of 1 or a composite rating of 1 or 2. But in addition to your regulatory health, I would, if you're on the BSA team or your compliance team, and the board should consider this too, it's how you respond to regulatory audits, how well you did on your BSA audit. If you have any findings, are you slow to implement them? How quickly, how effectively, efficiently can you implement those needed changes that were identified in your regulatory exam? So these are just a few of the preliminary considerations. We also tend to lump CRBs all into one category. There's no regulation or guidance that defines the different tiers of CRBs, but industry standard, there are 3 tiers. Your tier 1 cannabis businesses are your plant touching, your processors, growers, cultivators. Your tier 2 CRB customers are entities or companies that derive substantially all or most of their revenue from a tier 1 CRB. And then you have your tier 3. And chances are you're already banking a CRB. Your tier 3 are your businesses or customers that are only banking a CRB incidental to their other business, such as we'll just say a law firm or an accounting firm. The accounting firm has 1 CRB customer out of hundreds. So those would be your tier 3. I've said before, and I think others have said this as well, 2023 is the pivotal year of from nice to have to need to know. Whether you're banking CRB customers or not, every financial institution should really build out a program for identifying these particular customers. I worked on an audit in the past where it was the mortgage banking department within the bank didn't recognize that a SAR needed to be filed, where the applicant derived all of their income, this is in California, from a retail business. So there was, they were dinged on their BSA audit for that. So understanding the different tiers and how your bank defines those tiers, then establishing your risk, understanding your risk, based on, all of the things that go into your risk assessment, noting some of those items that I just mentioned, your audit, also capital levels, looking at how healthy your capital levels are. The two that I've left for last, I think are critical and underestimated. Your resources and staffing. One of the key takeaways I would like from my part is understanding the need to have knowledgeable staff, skilled resources at your institution. And again, training. So part of that would be training. Training is a prerequisite for any successful CRB program. Because it's still, as I mentioned, it's in the early stages, in the nascent stages, your staff really, are encouraged to join as many industry trade associations and engage in these trade associations to learn about, for instance, the Delta 8 and the Delta 10. It's not a static industry. It's ever evolving, it's ever moving. From a regulatory standpoint, from the products and what's available. So if you're inexperienced in cannabis, and I'll leave it at that, you might be shocked and surprised to know that there are chocolates, there are different edibles and beverages, and tinctures and tinctures, and it really runs the gamut. So having knowledgeable staff, skilled BSA staff to onboard and perform this due diligence and ongoing monitoring and perform your site inspections is absolutely critical. Second, I said the two that I left for last, resources and staffing, and the other one is technology. It still surprises me, it shouldn't be though, when I go to do a bank audit, and some of these, they're not always community banks. They are SIFIs, your 50 billion plus institutions that have clunky legacy systems that aren't speaking to each other. So staff have to download items and then manually input it. If that is how your system, your SAR monitoring program works, you're going to need it to layer really robust technology. I don't see how any bank would be able to do this manually. But again, there are some banks that are not, either their system isn't tuned. You're supposed to be tuning your BSA program. And every time you read an enforcement action, a well-publicized enforcement action, it's, the themes are often the same, and that is failing to have a robust and effective BSA program to detect these red flags. So red flags, they're only detectable if you have the knowledge to understand and identify a red flag in the industry. By that, on the other hand, you also need robust technology. You'll hear a lot about, if you're new to the industry, seed to sale and POS, point of sale tracking. Seed to sale tracking is required of retailers in the industry. So they already report this to their state regulator. A lot of banks will integrate their core system with the state reporting system. And there's several software providers in the industry that have, really easy to use. It layers on top, it integrates very easily with your core processing system. And that allows you to track the point of sale to make sure that every deposit that comes into the bank is from a legitimate transaction. So most banks will actually require that the cannabis retailer report through one of the software providers the point of sale, so that the bank can compare that with the seed to sale tracking system. So technology and people resources are extremely critical. But as I said, they're I'm still also surprised to learn that a lot of financial institutions aren't aware of the software that's available. So you're not having to build these programs from scratch. There are several well-known software providers that integrate with banks so that banks are able to track for their BSA purposes, again, your point of sale, to ensure that everything that's coming into the bank is being traced to the sale of products by the retailer. So with preparedness, in addition to performing your risk assessment, understanding the banks, there needs to be board buy-in, understanding and determining what CRB you're willing to bank as a customer. Maybe an ag bank is more inclined to board just your cultivators. Your growers. A retailer is the hub of the cannabis banking industry. So you have banks that run the gamut between your tier 1, tier 2, and tier 3. So understanding where your risks are, taking into consideration all of those risk considerations that are part of and generally included in your risk assessment. Once you've determined that, and if you're ready to bank, the next phase is, of course, building the framework. And as I've said, and I will always say, building your policies and procedures cannot be the proverbial pieces of paper in your office. This is an area where it's critical to ensure that your bank is adhering to the procedures and policies that have been developed, and then testing those to make sure that your internal controls are sufficient, that your training is sufficient, that your monitoring and your onboarding is all sufficient to ensure that your bank is compliant and not going to be the subject of a regulatory enforcement action. Ideally, you would build a standalone cannabis banking program and bake that program of your policies and procedures into your existing BSA program. Most banks have a dedicated team. There was a publication, and this was way back in 2018, when one of the Federal Reserve webinars that's published, and you can find it on the internet. And if anyone has any questions, I can find that later, because I often cite to it. They had a sample CRB program and ratio of CRB team members, your BSA and your onboarding team versus, per customer, for bank customers. So there are your staffing considerations, and there is some, that's not guidance, but it gives you some indication of what regulators are looking for. And again, learning from other banks, how they're successfully banking these customers. So building out the framework is more than just your policies and procedures. It's understanding the tiers, which CRBs you're willing to bank, and that fit within your risk appetite. And then developing that really rigorous screening and onboarding and monitoring protocol from your bank. And I think I'm almost to my time, but before we go, I mentioned earlier that the only guidance that's available to financial institutions is the 2014 FinCEN guidance. When you look at that, it's pretty, to me, I'd say obvious, and there's almost nothing there. It's pretty bald. Really building out your program, you're going to learn more from industry experts and participants than the FinCEN guidance. The FinCEN guidance, to me, is reading the obvious. Making sure that your CRB is licensed, and how you do that is verifying with the state regulator, and then conducting your ongoing monitoring. And they don't require enhanced due diligence, but if it's required based on your bank's policies, procedures, performing that enhanced due diligence and ongoing monitoring based upon that CRB's risk. There is huge opportunity. There's huge opportunity, and I love hearing, I know we have a bank on the panel. I love hearing the success stories from banks. I also find humor in some of the lessons learned, like the floor nuggie. They're really invaluable. And so that's one reason I'm really excited, and hope we can continue to do these webinars with NIPAY, because this is when you hear the stories from other institutions and experts who are guiding these institutions in this industry, that's invaluable, as I said, because there's not much to the guidance that will help you really develop that program.
Dena, that's great information. I appreciate it. One of the first questions that came up, and maybe you can answer it in the chat section, is the 2021 study that you referred to. If you could name that and just type it in for the folks, that'd be great.
I have a feeling that might come. It's such a great abstract. So it's an abstract you can find, again, published from Ohio State University in collaboration with UC Davis. And the title is On the Money, Characterizing Banking and Lending in the California Cannabis Industry.
Terrific. And if you'll hang with us as well as we start the panel discussion, I would appreciate that. Next, what we're going to do, I want to introduce our three panelists, and I'm going to ask them to give us a couple minutes, a little more in-depth on their bio, as well as some of the key issues that they're confronting right now. And then we'll lead off with Kirill, who is our CRB executive, in terms of the path and the journey they've taken in terms of their growth as a company. So first of all, we have Danielle Boyle, who's a specialty marketing banking manager with Dart Bank. It's a Michigan-based bank that has a national CRB footprint. So they're talking about complexity. Every state not only has unique legislation, but obviously unique regulations regarding CRBs and reporting and what can be sold and what can't be sold. So I think she'll bring a great perspective on how do you bank in a multi-state environment. We also have Neil Kaufman, who's a managing member of Kaufman McGowan, a corporate and securities counsel to the cannabis industry. And Neil and I have been talking offline about what's going on in New York right now. There's an injunction from veterans about the issuing of license, the initial issuance of licenses, and he'll touch upon that. And finally, we have Kirill Merkulov, who's the CFO of YumaWay. YumaWay was established in Denver in 2016 and operates retail, cultivation, and consumption facilities. That'll be interesting to hear more about the consumption facilities in a multi-state setting. And with that, Kirill, let me start with you, because this is everything we're doing right now is surrounding how do we bank and how do we work with CRBs. And folks, just by a little definitional thing, CRB is a cannabis-related business, and it's interchangeable with MRB, which is a marijuana-related business. So if we start getting into acronyms, maybe that will help you. So Kirill, if you'll give us a little more background about yourself and some of the key issues that you faced.
Thank you, Michael. Thank you all for being here, and thank you for giving me the opportunity to speak here. I'm very humbled to be present here in a panel of experts, although I don't consider myself an expert by any means, as I'm constantly being reminded by my kids on a daily basis. Yes, it has been a great, interesting, albeit journey from 2016 when we opened our first store in Denver. We have since grown organically to 15 locations in multiple states, have gone and experienced the hurdles of banking, or lack thereof, to be more precise. And being here today, very thankful to Dart Bank. So Danielle, thank you in particular for being here and for your bank for being in existence and banking us. We found that it's been actually a great fit for our operations, especially being in multiple states, answering to and adhering to multiple laws, different laws in different states, different jurisdictions. The complexity and the challenges are still there. We have experienced the hurdles, I'm sure everybody knows, with the credit cards, debit cards, cashless ATMs, all sorts of financial transaction activity, and the lack of the providers. Although it's gotten easier in terms of the actual banking itself, banking proper without cash banking, I should say, without having to get into the credit cards. And now I think just recently, and by no means am I an expert at credit cards or processing or banking for that matter, I think there's another hurdle that includes MasterCard banning the debit card rail transactions for marijuana related businesses, although it was not the case before. So we've experienced all that, and unfortunately right now, I'm sorry to say, we are not accepting any of the credit or debit transactions. We have tried that throughout our, with different vendors throughout our tenure in this space, and have stopped more than once, unfortunately, for one reason or another. So at this point, we are only cash-based and banking with, in this case, Dart Bank, which we're pleased to say very happy with.
Thank you, Kirill. Appreciate that. And that leads us right into Danielle Boyle. Danielle, maybe you can give us some insights into what you all went through when you decided, how you decided to get into cannabis banking, and what services that you're providing, and also talk through the issues on the payment side.
Sure. First, thank you for the wonderful compliment, Krill. We're always happy to hear that we're doing right by our customers and be able to provide them with the services they need. Dart Bank got into cannabis banking, I believe, back in 2018, when they decided at a high level to enter the arena, for lack of a better way to say it. They went right where they needed to go and decided that they were going to go straight to the FDIC and let them know that they were interested in doing this and they wanted to do it right. And it was our goal to be compliant in the space. We've been, so 5 years later, we're still trucking along. We currently support, I believe, cannabis related businesses in 15 states, multiple MSOs. And we really pride ourselves in 5 years on still really running a compliant program that not just works for the regulators, but works for our businesses and our customers as well. We, as it relates to services, we've really been able to, by building a strong foundation, working with other internal departments, we work very closely with our BSA team. We created a solid program and a policy that really intertwines itself a lot with our BSA team, so that, you know, we're in constant communication, making sure that we're doing things the right way. So with that, we've been able to develop a program. All of our customers have access to a whole suite of banking products. You know, they're able to send ACHs, they're able to send wires. You know, they're able to do a lot of the things that traditional businesses have always been able to do, and cannabis related businesses were not. What am I missing here, Michael?
Matter of fact, one of the questions you just came up, do you have any customers in New York, or do you support businesses in New York?
Well, I can't tell you at the moment, because again, there's a whole host of them. We're growing rapidly. Yeah. We are willing to support any state in which the cannabis related businesses are legal. You know, tier 1 businesses may not be legal, but we're always also looking at, you know, tier 2, tier 3, any kind of ancillary business and how we can support them. Sure.
And one question before I get to Neil, when the bank was looking at this back in 2018, you said 18, interest rates weren't a big deal then. They are now. Your cost of funding has gone up significantly.
Yes.
How much does that play into, I would say, in a general sense, a bank's decision to get into this market? Is it a viable option to bring in these low cost deposits? Now, they're low cost from an interest standpoint. They may not be low cost from an operational perspective, but what are your thoughts on that?
You know, you'd be silly to think that banks wouldn't take that into consideration, right? Yeah. It's cost of funds. Funds can be expensive, especially nowadays. And being able to get in low cost deposits is essential to being able to continue to provide services in other areas. Right.
Well, as we get into the discussion, I want to talk more about the ancillary services, whether they're armored car services or some of the payment methodologies, how you help your customers deal with bill payment and things of that nature. So let me go on to our attorney, Neil, and tell us about, you focused a lot of your efforts in your practice on cannabis related businesses. So why don't you give us an update on what's going on?
Well, sure. Thank you, Michael. And thank you to NYPAY for having me here this evening. My name is Neil Kaufman. As Michael said earlier, I'm the managing member of Kaufman McGowan PLLC. We're one of the leading corporate cannabis law firms in the country. We've participated in over $2 billion of cannabis industry transactions over the last 8 or 9 years. And if I may, I'd like to sort of weave together some of the threads that we've started discussing tonight and clarify a couple of things. So first of all, let's be clear. Banking services are critical to all levels of the cannabis industry. We tend to focus on the retailers because there are so many of them, but many of our cultivation and processing clients are also badly need banking services. You know, Dena's absolutely right that the FinCEN guidance has been the foundation of the ability for banks to provide banking services to the cannabis industry for a long time. The FinCEN guidance itself was built on the Cole Memo. Some of you that are familiar with the industry may know the Cole Memo has since been rescinded during the Trump administration. Nevertheless, the FinCEN guidance has been confirmed. Actually, the Cole Memo priorities are very similar to the general priorities that U.S. attorneys operate under. And so that FinCEN guidance remains in effect. Now, Dena was also right that that guidance is very general. And many people were concerned, well, if I have to file SARs, do I have to file SARs every day because there are transactions every day? And as the years have gone by, I think folks have become comfortable with the way this process has developed. There has been no rush by regulators to crack down on banks providing services to cannabis companies at all. There are very few reported regulatory actions taken. And in fact, for the most part, a bank that takes on a cannabis-related customer needs to file a SAR at the beginning and then monitor that company. And it's so long as there are no indications of running afoul of the Cole Memo priorities, there's an update after 90 days. And after that, there's really not an issue. It's only when, as a result of the bank's ongoing due diligence process, they notice an issue that may be arising, that's when additional actions need to be taken. With respect to New York, Michael, as you alluded to, we're fortunate in New York, we've got at least 10 or so banks and other financial institutions that are providing bank account services to cannabis-related businesses, which is a critical first step. The next step in banking services is lending, and we're starting to see a little bit of activity of banking institutions providing some type of loans to cannabis companies, initially usually collateralized by their real estate. There's been some talk in New York about a government-supported effort to facilitate lending to cannabis businesses, and that would be a major step forward. You know, back in the old days, in 2015, 16, when a lot of us first got involved, especially out west, where we did a lot of work. At one point, we represented 4 of the 5 largest cannabis cultivators in California. You know, they were dying for bank accounts, and they couldn't find literally any banks to provide them any level of services. That pressure has decreased quite a bit. There are now banks like Dart Bank and some others that do provide services in multiple states. So that sort of crisis mentality that we had a number of years ago has eased. But expanding into lending is a whole different ballgame. I think banks will find it attractive to go into that more and more as they realize that they can generate a higher return on their capital, because cannabis and lending generally throws off a higher interest rate that your borrowers will pay than non-cannabis. And then, you know, as Carol indicated, payment processing is really the backbreaker right now in the cannabis industry, because it's controlled by MasterCard and Visa, and they just won't do it. Now, we're all going to be interested to see what happens if the Safe Banking Act passes Congress, whether that will make the payment processors more comfortable, whether that might be extended to the capital markets on some level. And If either or both of those things happen, I think we're going to see an explosion of financial services being provided to the cannabis industry.
That's great, Neil. And I think that's an excellent point to make, is because everybody's going to have fear of missing out. If you get on board early, you learn about the business early, you know what skill sets you need, you know what technologies you need, you'll be way ahead of the game before the gold rush starts, if you will. Let me ask this, start with, and Krill, let me ask you, you touched upon them a bit, but talk about the issues facing a cannabis-related business in terms of being cash intensive. Obviously, you've got safety and security issues, cost issues, and talk about your journey in terms of finding banks. I mean, we've all heard the horror stories early on. If you did get a bank account, you were paying atrocious monthly fees for that service. Now, they've all come down in the past couple of years, but what are your thoughts on that in terms of that journey, finding a banking relationship?
Well, we've gone through, that's a very valid question. I'm sure everybody has been in the industry since about 2014 or 15 or earlier, have experienced pretty much very similar takes on it. So you're right. It was virtually impossible, as Neil just mentioned, it was virtually impossible to find an institution that will bank you. And then you would, if you were able to obtain an account, it would be limited to just that, just an account, no other services. The fees were outrageous, and especially if you have multiple locations that, God forbid, happen to have multiple EINs, then forget it. Then your fees, your just cost of carrying your bank accounts can run into thousands upon thousands. And so if you don't do that, then you have accountability complexity. So it's something that you have to find an equation at some point. Now with our current solution, again, Danielle, thank you very much. We are able to bank reasonably at one institution. I'm able to move the funds and pay the vendors, as many vendors now require ACHs, and it was very, very convenient now.
But you're still dealing with the cost of transporting that cash that you receive for payments for your services to the bank.
Correct.
Yeah.
Correct. So we do utilize third-party carrier that transports cash to the Fed to be deposited electronically into the bank accounts.
Just a quick question. Have you ever worked with any of the virtual vaults where you would take cash in at your dispensary and it would be accounted for and be considered deposited, even though the physical cash was still on site?
We have not. I can't say that we have. We have looked into that, but every option that was presented was cost prohibitive. Mm-hmm. If you figure the upfront cost, maintenance cost, the learning curve, and the basically reliability upon our employees, you have to have one very high volume location to make it worthwhile, I think.
Understood. Danielle, speaking to some of Kriell's concerns early on, how did you all deal with that and determining how you're going to bank these folks?
Obviously they saw the need out there. I mean, there's cash and cash, a lot of cash that was just floating around. It wasn't safe, for Kriell's business, for his, pardon me, his employees, not to mention some of the communities. So being able to, take that into consideration and really look at, okay, what do we need to do to be able to provide alternative solutions and do it in a compliant manner. We partnered, or I wouldn't say partner, but we work with a host of transport companies in order to kind of help service all of our customers, provide them with options if they need recommendations. But then also we spent time developing the whole cash management suite. So then we were able to help our customers transition away from cash. And in the beginning, it obviously wasn't right away, because it's great if Kirill has all these services and he's able to pay all of his vendors in a certain way, but his vendors don't yet have a bank account or haven't quite transitioned to using these other forms of payments. So, where he's using wires, where he's able to use bill pay, remote deposit, mobile deposit, smart safes, as I think you were speaking to.
Right.
I mean, that's another big kind of up and coming thing that we're starting to see a lot more businesses utilize, to kind of eliminate the time between them taking in the cash and the time that their armored car service comes, gets it, and actually takes it so it can be deposited either at the Federal Reserve or at the bank.
That's great. Neil, any of your clients had any particular story, or what can we talk about the famous unintended consequences of regulation? You have any stories you can share with us of well-intentioned legislation, regulation that ended up being onerous to the CRBs?
Oh, well, New York is the poster child for that, but I think that's happened in almost every state. From a big picture standpoint, Michael, the challenge that we face in the cannabis industry is that the cannabis industry has been around for 10,000 years. It's a $300 billion worldwide industry. Only in the last 120 years or so has it been illegal. So all these various state regulators think that they can structure their laws and their regulations in a way that will shape the market in their state without fully realizing, over and over again, without fully realizing that whatever they do to distort their marketplace to meet their own political needs or preferences, all that happens is the market backfills. So all these states that have raging black markets, it's not only because, but it's partly because their regulatory structure doesn't allow the industry to function fully. And so almost every state has made that mistake. And New York has as well. New York and Washington are the only states that have the alcohol-driven two-tier market requirements. It's kind of insane. There's no reason for it. And so, you could go state by state and check every box for how the best of intentions to try to protect their state and make their state homegrown, like in Colorado and Washington, where they had residency requirements, severely crippled the ability of cannabis companies to raise the capital necessary, because cannabis is a very capital-intensive business. And when you cut off the rest of the marketplace from those local cannabis companies, you choke your local industry. That's why we haven't seen nearly as many, I think, Colorado-based companies become national leaders as you would have thought, given Colorado's first mover advantage in the recreational marketplace. Well, they strangled their industry for a few years, as Washington did. New York's taken a different approach. While they haven't imposed residency requirements, they've imposed severely draconian limitations, resulting in almost any experienced cannabis investor not being allowed to invest in New York. Again, way to go if you want to choke off your industry and all the social inequity applicants that you want to help grow. Unbelievable examples of the law of unintended consequences.
Yeah, I spoke with the treasurer of the state of California late last year, and she had mentioned that the state income tax level was great. It was a boon for the state, but nothing was there that limited or restricted counties and municipalities for layering on additional taxes. So some of these CRBs, including the cost of licensing, were paying well over 50% effective tax rates in moving. Right. So
and as a result, those businesses struggled and couldn't compete effectively with the black market. As a result, the black market just boomed. And now, a few years later, California has realized the error of those particular ways and scaled back their tax burden considerably.
Real, you mentioned early on the search for banks, and talk about, and we was mentioned a little bit earlier about lending. I think there's a question about that in the chat. What are you all doing in terms of your borrowing needs?
Well, we've been lucky enough to be self-funded to this day. So anything is either self-funded or organically grown. So we'll either open new location based on the competitive application process, or if we needed to purchase equipment or expand into one industry or another, we'd do it out of our own proceeds.
Do you see a lot of your competitors out there self-funding as well at this point in time?
We're also seeing many competitors that went public, and unfortunately was not the best step to take. We see a lot of stock dropping, and I understand the cautiousness of the banking institutions in terms of lending to the actual cannabis businesses. Right now, unfortunately, the industry is very volatile, and it is no longer a novelty. There's no longer crazy profits for the bulk of the industry across the board. Although there are some spots where you can still make initial 10-year-old, whatever we were, the margins that were present 10 years ago. But overall, what we've experienced in going from one state and expanding to others is that as the industry matures, so do the profit margins. So it becomes a regular, really no different than liquor business inventory, I think.
Yeah.
Except with a higher tax rate. Because of 280E.
Tax rate, and then I think I wanted to actually go back to Michael's question to Neil. I think, Michael, you wanted Neil to touch base on some of the, unintended consequences?
Right.
I think a better question would be, show me examples where there are none. And it's much easier to name those.
I don't think there are any of those. Are you aware of any?
That would be a utopian world, especially in marijuana. But I am glad actually to touch base, to touch on that point. Just the other day, I was present at a meeting where Attorney General of California is actually taking steps into minimizing, or at least taking some action on land use law in curbing the illegal California businesses. Because I think in California, that is the biggest challenge that's battling legal businesses.
Now, that's a problem everywhere, really.
Yeah.
And that's a challenge because the tax rates are so high. The black market doesn't have to pay those taxes. The regulatory burdens and cost of compliance are so high, and the black market doesn't have to pay those costs. So when you add that up, it's just very difficult to compete qualitatively if you're in the legal market.
Yeah.
And make
one thing I want to touch on over your left-hand shoulder, you talk about mergers, acquisitions on your backdrop. Krill, what do you, from a strategic standpoint? I mean, I've seen in multiple industries where you have a lot of new entrants, a lot of mom and pop players. The field gets flooded, and ultimately there's a consolidation that occurs. And so, from your perspective, you're probably one of the bigger players. And Danielle, from your perspective, if you're banking a bunch of these players and they get merged out, what risks does that pose to the bank? And Krill, what opportunities do you guys see out there in terms of an overall strategic perspective?
Danielle?
We've seen a huge increase in mergers and acquisitions, obviously within the last year, especially. Thankfully, we've been able to retain a lot of relationships, and I think that's really what it is. It's differentiating yourself as a bank and really just, doing everything you can to provide the services that your customers need so that they continue to keep the deposits with you, no matter, which way the merger and the acquisition goes.
And I think, for the bankers out there, that's something you really need to consider. If you're going to make the investment and the time and the capital and the personnel to effectively get into this business, then you've got to look longer term is that ultimately you will have people that get bought out and merged. Are you going to be able to keep that business? Because if not, you made a huge investment and all of a sudden you lose all these deposits. Mm-hmm. One other last point on the banking side, Danielle, is lending. We've got a couple of questions on lending. Where do you all stand on that?
We do lend, but being the size of the bank that we are, we do have a small bucket. Mm-hmm. And as you can imagine, that bucket filled up very quickly. Because again, the lending side of things, the cost of funds is way lower if you're going to go through a bank than some of the other alternatives that are out there.
And I think to Neil's point, most of these loans are probably classified as commercial real estate because they're being secured by land or buildings or whatever.
Correct.
And keep in mind, Michael, in many, many states, all but a few really, you really can't perfect your lien on a lot of your collateral. Your inventory, in order to take possession of the inventory and resell it, you need a license, right? Which a bank's not going to have. And there are very few accounts receivable because many states require very quick turns of payables. So there's a real lack of collateral on which banks can rely upon to lend, which is part of the reason why we've seen, we saw over the last few years, a huge amount of lending coming into the cannabis industry from non-bank hedge funds. Like a lot of the distressed hedge funds that were seeking higher yield found it in cannabis because cannabis borrowers couldn't borrow sufficiently from their banks. So they borrowed from the hedge funds. And then we find the banks and the hedge funds need to play nice over control agreements and things like that in order for the hedge funds to have any comfort in their collateral to the extent it finds its way into bank accounts. So it's been a complex journey. On the mergers and acquisitions front, that activity has slowed down considerably over the last 6 to 12 months because primarily of the lack of capital in the cannabis industry and the collapse of cannabis public stocks. So many of the acquirers who were going out and buying up, on the consolidation plays, they no longer have the cash to pay, and their stocks are in the dump. So they don't really want to issue stock as payment for their acquisitions. So we've seen really a severe pullback in the cannabis M&A market, rolling into more of a transition towards a distressed M&A market where some of the industry players that are really struggling in the current environments with high tax rates, compressed margins, collapse in crop prices, et cetera, are just running out of money and running out of runway without capital available to them and are ending up having to get sold at distressed prices, or in some cases, like we saw in California with herbal, just collapsing.
Yeah. Interesting question just came up. We touched around what payments you can't take. And, Creel's company's all cash-based right now. And the only other legal source that I found are closed loop ACH systems to be able to do something that's non-cash. But obviously, Visa and MasterCard have clamped down on this thing. And I'll just open this up to the group what do you think of the closed loop ACH as an alternative until you're able to get branded cards into the loop?
all there is, besides cash. Right?
Yeah.
What do you
I
think,
mean,
Danielle, Carol?
I mean, really, that's the biggest struggle right now, the limited access to non-cash payment solutions. You know, look at all the things that have happened with cashless ATMs and then with MasterCard and Visa. I mean, things are they're changing. So whatever it is you decide to do, I would just always make sure you have a plan B.
I think Neil nailed it. That's all there is. But that does not answer the question of consumer demands. So consumer is willing to pay more, but only if allowed to pay with a credit card. Consumers are not walking around or into your store with little bank app willing to ACH you the money.
Mm-hmm.
So that solves your supply and vendor solution, right, problem, but doesn't do anything on the front end.
And let me just leave with this, and then we'll open it up for the Q&A and then the breakout session. Is ultimately, where do you say we've really focused, and we touched upon earlier, we focused on dispensaries, but in the entire supply chain, from the grower, the cultivator, the processor, so on and so forth, I think banks need to realize, if there's an opportunity, look in your primary service area, where is that opportunity? Is it the dispensary, as we all been talking about, or is it further up that supply chain, ultimately to the grower? You're somewhat vertically integrated, aren't you, Kirill?
In some states.
Yeah, and Danielle, do your clients go across that spectrum of the supply chain, or are you more focused on the dispensary side?
No, we have the whole spectrum.
And on the grower side, do you take some extra? Have you done ag lending in the past?
I know Dart Bank, in its history, has done a lot of ag lending, but not in this space that I'm aware of.
Mm-hmm. Okay. Ron or Dave, do you want to
Yeah, I
answer
think
some questions that are out there?
I think David, you're gonna pick up the questions.
Well, sure. We already talked a little bit about alternatives to using cash. What else have we got in here? We had a question about banks that service cannabis-related businesses. I think there's some in the chat. Y'all should recognize that you can save the chat at the end of this conversation by going to the little arrow down at the bottom of the chat to save the list. What else do we have here? There was a comment that Deidre posted about New York and but that was really a question. That was a comment about the fine to building owners that knowingly rent to commercial space for legal cannabis businesses.
Yeah, so that was authorized by the state legislature a month or two ago in an effort to try to combat the black market activity in New York City, especially. I mean, there's something like 1,500 illegal retail cannabis stores.
They're all around me. They're all around my apartment, right? Everywhere I go.
Yeah, and not to mention every smoke shop, half the bodegas, and they just can't really shut them down fast enough. There's just no capacity on the part of law enforcement to be able to adequately address that. So they're threatening the landlords, fine. Shutting down the stores is no threat because they're just open again the next day. Even if the sheriff comes in and seizes the inventory, they acquire other inventory. Even like Empire Cannabis was shut down. They had showdowns with the police and the owners, and they were open the next day. And so it would take like probably well more than a year at the pace that law enforcement could possibly go to shut down every single black market retail cannabis store in New York City. So you get shut down today, you open tomorrow, you operate for another year. Oh, okay, you get another $10,000 fine, or you get a $50,000 fine. Okay, well, that's the cost of doing business.
There was one other. Go ahead, Michael.
I was just going to say, I noticed one comment about FinCan being able to offer compliant MasterCard, Visa, PIN debit merchant processing. who on the panel's familiar with that?
Well, I am, because I know Nathaniel Gurian and I have represented FinCan over the years. And so, look, other ways people have sort of gotten around the MasterCard Visa problem is by using foreign processing, where it's significantly higher cost, but you can route the processing outside the US. Sometimes people just lie about it and use straw entities until they get caught, and try to daisy chain that along with repeated straw entities. Maybe Nathaniel's got some other brilliant solution. He might. I don't know.
Well, I think it's a good time now to move to a breakout.